Hey traders, welcome back to our channel. This is Kenya with BK Trading Academy. We're going to hop into an analysis of EURUSD and talk about how to combine technicals with fundamentals in order to find a very confident, high probability setup. So we're going to go ahead and clear our chart here, and we're going to go to the monthly time frame, and we're going to look at overall what is happening with this price action. So currently we're trading at $1.08. You can see that we've had some consistent resistance here from 1.11 to about 1.12, and price has kind of struggled to break above this. So if I just look here, I would say that we are in a downtrend on the monthly, and it appears that price wants to continue this bearish continuation. Now, the nearest target is right here at this support, which you can see is a cluster of support in the past. It was also resistance a bit. And then we can see in the same area right above it was also an area of support as well. If I pull this out, this is a very key level of support. And again, price tested here back in 2015 and December of 2015. So very strong area where the market is more than likely to come to make a bounce, and then we'll have to further evaluate from there. But I'm going to be mindful of this. So why am I going way out to the monthly? It's helpful for me to find these clues. If I look out to the monthly, I can see where the obvious trading opportunities are. So look here how the market served as really strong rejective support here back in 2016. Look at what happened when the market came here again in October of 2023. So look at that bounce to the upside, and that would have been a great opportunity for you to take advantage of. So now I'm going to be mindful that price is starting to fall. We've had a high here and another declining high here on the monthly. So that's going to be really significant to me in my analysis. So I'm going to mark this area right here because that sticks out clearly to my naked eye. And I'm also going to just put a level above price really quickly. And I may just change that a little bit as I continue to drill down. So now I'm going to go to the weekly time frame. And when I look on the weekly, this price action looks a little bit ranging to me on the weekly. So you'd probably agree. So this is a key level resistance though. So what I would be telling myself right now is that I don't want to trade from the middle of this range on the weekly. I can see clearly that my opportunity is here. So right here, as it was in the past. And my opportunity is right here if I get a retest of that area. Okay, those are the type of areas we want to trade, not these little minor areas right here. That's not what we're looking for. Okay, so now I'm going to continue to drill down, and I'm going to keep in mind that, okay, on the monthly, it appears that we're going to continue to the downside. And on the weekly, the price action looks a little bit more sideways to me. So I'm just going to keep this in mind as I continue to drill down further. And as I drill down further, I am developing my bias. Okay. So now as I go down to the daily, you can see on the daily, we are pretty bearish. So if I do something like this, I'm just going to delete this. Here is our level of resistance, right? Now that's our key level resistance. Of course, we do see other areas of resistance here. Like I see resistance here, which was also previous support, now turned resistance, okay? And then again, here's the area that I noted on the weekly. So since I am seeing this, what I would be doing is looking for any pullbacks to the previous structure. So I know that this is a key level on the monthly. What I could do is I can continue to trade these levels here according to structure. So if I'm going to trade the current market structure, what I'm going to do is keep in mind that we are in a downtrend. Okay, so we are in a downtrend. I'm just going to move my trend line out a little bit to give the market enough room to come back and retest this area. So I see what could happen right now is that we could get a retest back into this area. And if that's the case, I am going to set an alert, and I'm going to be ready to trade that area. So I'm going to set an alert right here at 1.0920. So I'm going to set an alert, and you can do this with me if you'd like. 1.0920, and I'm going to put Euro USD short. Okay, now this doesn't mean I'm going to short when the price gets there. When I get the alert, I'm going to wait, and I'm going to look for some type of confirmation. I want to see, for example, that price stays below my 50-period moving average, which is acting as dynamic resistance in this downtrend. I want to see wick rejection within the zone, and then you can add any other confluence that you want to see. So this is going to be my resistance, and notice that right now price is at support. right? This is where the market rebounded before. As support, you want to sell from resistance. So it's the beginning of the week. We're going to stay patient because we do have some important news. So now that I have my markup, you can see I have my level of resistance following market structure, and here is my key level support, okay? So what you can do is you can see if the market will pull back into this area. Let's see how many pips that is. So from here to about here, that's only 97 pips. So that's a reasonable pullback. So we could possibly get a pullback into this area, and then we could take a short, putting our stop loss outside of the trend line and above the 50-period moving average, and then take it to this key level support. All right, now what if the price just keeps dropping? What we could do is when the price gets here, we could look for a buy opportunity, but it would be a counter trend to the daily. The nice thing about it is that if I capture this price action inside of a channel, you will notice that if price does move to this area, it will be at the bottom of our channel, which is a confluence for a potential buy. Okay, so that is how you want to mark up your chart, starting from the higher time frame, moving down to the lower time frame. And now we want to look at fundamentals. So because this is Euro USD, I want to go look at any type of news and find any type of reports coming out for Euro and USD. So I'm going to go to Forex Factory, and I'm going to start on Monday because today is Monday, and I'm going to look for red folders that have USD or Euro in it. So I can see that I have the consumer confidence report on Tuesday and also JOLTS job openings. Now from the past and from me researching and studying these type of reports, there's not much impact on these reports. They're not very volatile, so it's not something that I need to worry about. However, I do see that as we scroll down, we can see that we have the German prelim CPI for Euro on Wednesday. That's all day. And I can look at the previous reports and how they've come in. So previously we had a bearish result from that. And then for the last like 3 months, it's been bearish. Okay. So in that case, if this news comes in bearish again, that will cause Euro USD to fall even more. Now I'm also going to look at, it's the first week in the month of, well, actually, we're going to be moving into February on Thursday, but not quite yet. But we do have the ADP non-farm employment change. So that usually is an indicator of how NFP will perform during the first week, which you can see we have on Friday, the 2nd. So here's our USD non-farm payroll. So if I'm going to be trading Euro USD in between that time, then I want to keep this in mind. Now, if price hasn't moved toward my key levels, I can just wait and sit it out and not trade, because what's going to likely happen is that these reports are going to drive price to my key level that I'm waiting for. So if I am trading from my key level, and let's say that, for example, today is Monday, but I know that NFP is on Friday, what I can do is I can trade from, for example, if price comes to my resistance, I can trade from here. I can use a reasonable stop loss outside of the channel or above the 50-period moving average that's comfortable within my risk parameters, and I can continue to trade that trade. If price starts to drop and I'm in the trade, and let's say I'm 50 to 60 pips in profit, I can move my stop loss to break even, and when the news comes out, I'm already in a risk-free trade. So if I get stopped out, then it's okay. This is how you can trade around fundamentals. Another thing you want to do is you want to look at, for example, what happened in the previous reports. So for example, if I was going to trade a GBP pair, I see that they're going to have their official bank rate on Thursday. I would go here, click on this folder, and I could do a little bit of background research. Okay, what has happened during the past couple of months? Is GBP raising rates, or are they kind of steady? Are they indicating raising rates? If they're not, that could give me confidence to keep shorting, for example. So I know that if a country is not raising rates, that's going to weaken their currency. But if they start raising rates, that's going to boost their currency, therefore pushing it to the upside. So this is how you can combine fundamentals with your technicals to give you a much stronger indicator of what can happen in the market. So I hope you enjoyed this quick analysis. What I recommend is that you do this same markup with me right now if you're watching it according to the date that it's published, and then watch how the market plays out around this analysis. Set your alerts. Let's see if it's respected or rejected. I hope you enjoyed this. If you're new here, I encourage you to subscribe, turn on the notification bell, and you'll be alerted when we upload our next content. I hope you found this helpful. Trade safe, and I will see you in the next video. Thanks for watching.